Hello, Professor. This is Manam, and today I'm going to explain about Fresnel financial information. Here is my PPT. In my PPT, my first slide is about introduction of Fresnel financial information. The financial data encompasses a wide range of information such as income, costs, and earnings, assets, liabilities, and more. This comprehensive data set from the backbone for analyzing fractional financial standing and performance, and stakeholders including makers and investors rely on the data on the gauge fractional stability and potential for future growth. And additionally, understanding fractional financial status is crucial. Shareholders as directly correlates to the company's ability to create the value, and this information assets in making informed decisions and regarding expansion investments or strategic objectives. And my second slide is about the pro forma income statement is made up of several parts. Here is profits and cost of goods source, and gross profit and operating expenses and operating income and interest, tax, and amortization and net revenue. And I want to explain about profits, and the encompasses all income received by the company irrespective of its source, be it sales, services, and service fee or any other revenue streams. And cost of goods, so this represents the direct expenses associated with the producing the goods or service that the company sells. And gross profit, calculated by the subtracting COGS from the revenue. Gross profit reflects the profitability of the company's core business activities. It demonstrates how efficiently the company is generating the revenue from the direct cost. And the next one is about the operating expenses. This expenses covers the essential day-to-day operational cost incurred by the company to run its business. Items like rent, utilities, and marketing expenses fall under this category. And the last one is the net revenue, also known as net income or profit. This is the final figure derived after subtracting all costs, including taxes, from the revenue. It's significant all over overall profitability of the companies after accounting for the expenses and taxes. And my third slide is about the analyzing the numbers. Here the numbers are revenue growth and gross profit growth and operating expenses and net income and EBITDA. And my fourth slide is about the strengths and weaknesses. Here the strengths are constant revenue growth and healthy gross profit margins and controllable operating expenses. And here is the weakness of Fresnel information system information, declining the gross profit margins and rising the operating expenses and declining or negative net income. And my fifth slide is about current assets and current liabilities and working capital ratio. Here is the current assets are, these are the assets expected to cover converted into cash or used within the year. They include cash itself, accounts receivable, and other assets that are relatively liquid or can be turned into the cash quickly. Current liabilities, these represent a company's obligations and debt that are expected to be settled within a year. Examples that are include accounts payable, short-term loans, and expenses such as wages, utilities, or taxes that haven't been paid yet. Working capital, it been different between a company's current assets and its current liabilities. And working capital ratio, this ratio is measured of company's abilities to meet short-term liabilities using the short-term assets. And my sixth slide is about strengths and weakness. Positive working capital ensuring the short-term obligations can be met, and weaknesses negative working capital including the potential cash flow problems. And my seventh slide is about the investment cash flow. Free cash flow, FCF, is measured as the cash company generates from the operations after accounting for the capital expenditures. It's crucial metric because it shows how much cash company has available for expansions, and reducing the debt. And here, net present value and discounted cash flow and benefit cash to cost ratio. And in my 8th slide, I explained about the favorability and analysis. Here, NPV. Here, there is a three types: NPV and BCR and IRR. A higher international ratio return, IRR, international ratio return. BCR means beneficial cost ratio. NPV means the project expected returns, suppresses its initial cost, signaling that likely to generate profits and worth pursuing investments. And my ninth slide is about the recommendation of Fresnel for venture. It is advised to move forward the venture converting on the following given market alignment, competitive advantages, and manageable risk. And here we are going to discuss about the strategic alliances and R&D investment and marketing and outreach. And my 10th slide is about the conclusion. And this project presents the Fresnel with a significant opportunity to establish a strong presence to renewable energy industry by thoughtfully applying the recommended strategies and techniques. The company can capitalize on the existing market demand and position itself as a forerunner in the sector. It's a chance to Fresnel to leverage its strengths and become a prominent player in the renewable energy. Thank you, Professor. Thank you so much.